All right, welcome back to the SENB Daily Brief, where fear gets clicks, but context gets you paid. If you're just tuning in, Bitcoin didn't just tap resistance, it kicked the door in, wiped out shorts, and said, "Here, I'll see you at 97,000. Meanwhile, alts woke up, XRP is everywhere, and Washington decided this was the week to remind crypto why nobody trusts a 300-page bill dropped the night before a vote. Markets are green, sentiment is shifting, and tomorrow, regulators step into the arena. Let's break it down.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's talk price action, because the tape matters. Bitcoin ripped through the $94,000 to $95,000 zone and pushed up near $97,500, marking a two-month high. That move wasn't random. CPI came in exactly in line, rate cut expectations firmed, and spot BTC ETFs pulled in over $750 million in a single day. That's institutions saying, yeah, we're comfortable buying here. Ethereum followed through nicely, $3,300 plus, up about 5%, while Solana continues acting like the strongest major in the room. XRP cooled slightly today after the surge, but volume remains elevated, which matters more than the candle color. Now, let's check the market temperature. Fear and greed, 52. Neutral, leaning optimistic. BTC dominance, approximately 59%. Still high, but cracking just enough to let alts breathe. Translation, this is not euphoria. This is rotation with intent. So, why is the market moving? Great question. Let's see if we can answer that when we come back after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, markets are moving, sentiment is improving, and institutions are stepping back in. But price action doesn't move in a vacuum, because behind this rally, something bigger is happening in Washington. Let's talk about the Clarity Act. Over the last 24 hours, the Senate Banking Committee released updated fact sheets and amended draft language for the Digital Asset Market Clarity Act ahead of tomorrow's scheduled markup. This isn't rumor. This isn't leaks. This is official committee material, and that's why crypto social media exploded today. At its core, the Clarity Act does three major things. First, it clearly divides regulatory authority between the SEC and the CFTC. Second, it defines when a digital asset is a security and when it is a commodity. Third, it replaces regulation by enforcement with actual written rules. That alone is a massive shift. Today, the Senate also addressed what they call 7 major misconceptions about the bill. According to the committee, the Clarity Act does not ban self-custody. It does not criminalize software developers, and it does not legalize illicit finance. Their framing is investor protection, national security, and regulatory certainty. But here's where things get complicated. There are more than 130 proposed amendments circulating right now. Some affect DeFi, some target stablecoin rewards, others raise privacy and yield-related concerns. This is where the industry starts to split. Coinbase publicly warned that this version of the bill could be worse than the current status quo. Their concerns focus on potential restrictions around DeFi interaction, tokenized equities, and stablecoin reward models. That matters because Coinbase has been one of the loudest voices calling for regulatory clarity. When even they hesitate, lawmakers pay attention. Now let's talk about why XRP is suddenly everywhere. Ripple just secured preliminary approval for an electronic money institution license in Luxembourg, expanding its legal footprint across the European Union. At the same time, language in the Clarity Act could allow certain assets to be treated as non-securities if they already trade through regulated products. That combination helps explain the volume spike, the Korean market activity, and the renewed institutional chatter around XRP. There was also a viral post today suggesting U.S. financial markets could transition significantly onto blockchain infrastructure within the next 2 years. Whether that's optimistic or exaggerated, the message is clear. Pressure is building on lawmakers to deliver clarity, not delay. You've probably seen claims that the Clarity Act means wallet surveillance, DeFi bans, or forced KYC on cold storage. At this stage, many of those claims are speculative. Some amendments raise valid questions. Others are pure engagement farming. Nothing is finalized yet. Here's the real takeaway. For the first time in years, crypto regulation isn't happening primarily in courtrooms. It's happening in committee rooms. That's progress. Tomorrow's markup matters, and we'll be watching it closely. All right, let's take a breath and move on. After the break, we get to my favorite part of the show. The Proof Thought Mailbag is coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, before we wrap up today, it's time for Proof of Thought. This is where we take real questions, real comments, and real signals from the community. Not engagement bait, not rage posts, just thoughtful input. And yes, the name is intentional, because around here, thinking still counts. First message comes from a viewer asking, if regulation is finally coming, does that mean crypto loses its edge? Short answer, no. Long answer, crypto doesn't lose its edge when rules arrive. It loses its edge when rules don't exist. Uncertainty scares capital. Clear rules don't kill innovation. They tell builders where the lanes are. And when the lanes are visible, institutions move. Next question we saw a lot today. Should people be worried about self-custody under the Clarity Act? Right now, no. Nothing in the current draft bans self-custody. Some amendments raise questions, but there's a big difference between discussion and law. The smartest move isn't panic, it's staying informed. Another comment that made me smile. So, is XRP the main character again? Look, markets rotate, narratives come and go. XRP happens to sit at the intersection of regulation, payments, and institutional interest right now. That doesn't make it magic. It makes it relevant. And relevance is what markets trade on. Final thought from the mailbag today. If everything feels louder online, that's usually the signal. Fear shouts, conviction whispers. That's it for Proof of Thought. More tomorrow, assuming the internet doesn't melt first. When we come back, we'll tie this all together in a nice little bow. Final thoughts after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's close it out. Markets are green, narratives are loud, and regulation is finally stepping into the light. That combination doesn't happen often. Bitcoin breaking key resistance tells you risk appetite is back. Ethereum growth tells you builders never left. And the regulatory debate tells you crypto is no longer a side conversation. This space is maturing, not slowing down. And before we go, quick nod to the SENB community. We've seen increased volume, new holders coming in, and yes, a fresh all-time high. Not because of hype, but because attention follows consistency. This project grows the same way markets do when they're healthy. Slowly, intentionally, and with conviction. No promises, no noise, just signal. We'll be back tomorrow, especially with the Clarity markup on deck. Until then, stay sharp, stay curious, and remember, fear is loud, signal is quiet. See you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production editing and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.